This is the busiest week for earnings, headlined by mega caps like Microsoft, Amazon, Apple, and Meta also on deck. Visa, Coca-Cola, GM, and McDonald's. Let's bring in Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors, as well as a CNBC contributor. Hi, Stephanie. I know you like to hide out in the individual names and ignore the broader market, but you probably slept a little bit better this weekend after last week. I think we all did. I mean, the averages after Monday sort of made a stand and got back to where they don't look that, they're not that far from maybe hitting highs at some point in the next century.
Well, the markets have rebounded very nicely off the lows seen in the beginning of April. Joe, you've seen it. The S&P is up 8.3% from the lows. The Qs are up 10.1%. The Dow's up 5.1%. So we've had a nice rally. And I think we can continue to rally if earnings continue to be good. I mean, earnings growth, so far it's only 36% of the S&P 500 that have reported, but earnings growth is running up 17%. Revenues are running up about 4%. So that means margins are doing their job, which is what I've been thinking about all year, that I think margins are going to surprise to the upside, and that's what they're doing in the face of tariffs, in the face of all the noise that we're seeing. So I'm actually just surprised that we're getting any guidance at all. So numbers are good, guidance is okay, and I think if that continues, yeah, I think we can continue to see a nice rebound in the markets overall.
The companies we want to talk about, the big ones, the tech that's coming this way, the Journal, that's one of the lead stories in the Journal, that it's the worst start to a year for the Magnificent Seven since the pullback in 2022. And I had to think about that because, as I said, my mind is mush. So I guess there was a pretty big, that was not pandemic related. That was later. And I remember probably the lows in October of both 2022 and 2023. So that's what they're talking about. It's been rough for these stocks. You think it helps this week with what happens with earnings, or is it going to be the outlook going to be so cloudy that it's just going to increase the uncertainty?
Well, I think Alphabet was actually pretty good to start with all the Mag 7s reporting. I thought basically it was in line, but the operating profit, the operating margins were far better than expected. So I think it was better than feared. And it was a solid report, and I think that bodes well for a couple of them this week. I own Amazon. I've been adding to Meta. Meta's actually been a fairly new position for me in the past month. I took advantage of the 30% drop in the stock to buy. So I guess it all depends on your time frame in terms of how you own these things or when you own these things. But I've been very careful and selective in owning these because, yeah, they had a nice run last year, and they're not cheap. But the pullbacks are giving you some opportunities for what I think are long-term, you have to have core holdings.
All right, Steph. That's not necessarily your favorite place to be, though, is it? You like maybe some other more, don't you? What else at this point?
I do. I know. I do. Well, look. What are our learnings from earnings season, right? So far, where do you want to go to when the market does pull back? Who reported good numbers? I think the banks reported very good numbers. The big six all beat expectations on earnings. And not only was it better deposits and loan growth, capital levels, trading activity, but it was also loan loss provisions were much less than expected. And I think that bodes well, and that speaks well to a consumer that's hanging in there. And so, yeah, I mean, I like some of the banks, Morgan Stanley, Truist, even JP Morgan, which I don't own, had a very good report. I think the two themes in industrials that we've been talking about for a couple of years now, aviation is one of them, onshoring is the other. Boeing, which got upgraded today, you know it's one of my favorite stocks this year because I think it's so depressed and I think they are turning the corner. They actually reported much better numbers in terms of free cash flow. They lost a lot less than people thought, and they're going to be positive in the second half of the year. And they also operating margins. I don't even remember the last time Boeing had a surprise on the operating margin line. It was up 290 basis points year over year. GE, they just continue to beat, raise. Actually, they guided in line even with tariffs, but ex tariffs, I mean, the numbers are going higher. And then onshoring, reshoring, we got really good results last week about data center demand and about electrification from GE Vernova, from Vertiv, even Alphabet talked about how data center is still strong. So I still like those. Eaton and Quanta Services, they report later this week, and we'll get kind of some confirmation, I think, on that theme as well. So I think there's a lot of places that you could be buying and adding to on the pullbacks. You don't have to chase, though, Joe. You just let the market come in, let the stocks come in. But where you're seeing good earnings reports, those are the ones when they pull back are the ones you want to own.